Thank you for watching the Housing Oregon YouTube channel. Please like and subscribe. Slide decks from the presenters are going to be available below. Thanks for watching.
Just wait for the last couple to sit down. Yeah, so the title of our presentation, Could Insurance Be Any Worse? Practical advice for navigating the brutal property and liability insurance market for affordable housing providers. My name is Andy Oldenburg. This is year 20 in insurance. For me, I work at Marsh, McLennan agencies, so we are part of the largest insurance brokerage in the world. So I feel like in 20 years, I've seen a lot, and I have sitting next to me, Dave Bachman from Cascade Management. I'll let him introduce himself, but through insuring Dave, I've worked on affordable housing for probably 18 of those 20 years of insurance, through a lot of good and a lot of bad. So Dave, I'll let you go here.
Thanks. Andy's blaming it all on me. I can see how this is going already. But I'm Dave Bachman. I'm the CEO of Cascade Management. Been an affordable housing manager for 30 years. We're also an owner and a developer and consultant in what we're doing in the affordable space. So yeah, Andy and I are sharing a lot as it relates to kind of problems and solutions and how we're moving forward in a market that's pretty volatile, the insurance market. And so kind of walking through that, I mean, I think we want to talk a little bit about, you know, some of the solutions and ideas, but fundamentally just kind of an understanding of where we're at and kind of what's in front of us in the foreseeable future to work to overcome. So
I can tell that insurance is a hot button topic because usually when I tell an organization I can come talk about insurance, there's always the caveat. They're like, yes, you can, but they try and subtly say, can you please not be boring? And like that caveat didn't actually come this time. So it's like, I feel like us insurance people have gone from an annoying like checkbox to something that's like scary and really in a bad spot for some people right now. And so the idea is to, like Dave said, help you understand where things are at now, and then hopefully give you at least some understanding and some advice moving forward to try and navigate through these issues that we're kind of in right now. I wanted to share this slide. This is from a survey that got put out of affordable housing providers last year. You can see this chart of premium increases, like especially 22 to 23. That's that right set of multicolored things there. 29% of people got over a 25% increase on insurance in 22 and 23. And I mean, it's just been really going up every year, and it's getting harder to get. You can see the middle there, there's some kind of discussion on what the reason for those increases was. And the biggest being a lot of insurers have left the space. It used to be I had 5 places to go that were a good price for affordable housing, and now I'm down to 2. And that's the good pricing. I can get you the bad pricing from like 10 of them, but most people want the good pricing, right? And so, and again, I'm speaking from like the largest insurance agency out there. So it's a very shrinking space, and we're trying to navigate it. And I can tell you it's the same for market rate as it is affordable. So it's really not any different. It's apartments in general are problematic right now. And so over on the right, you can see 93% of the people they surveyed said we're trying to do something to control the price of this, whether it's increasing deductibles, increasing rent to whatever degree they can in an affordable housing project, and trying to decrease operating expenses elsewhere, which we all know is not the easiest thing in the world to do with the cost of everything else going up also. So real briefly, this chart is just tracking the average cost of every line of insurance, was auto, workers' comp, property, from 2020 to 2024. And those bars are increases. So you can see like the cost of a lot of things through COVID, it just went really crazy. I mean, those are quarterly increases of massive amounts. The good news, if you can see it, is it's starting to tail off at the end there. And this next slide this is for property insurance specifically, which if you're insuring a affordable housing complex, 90% of the cost is in the property insurance, not necessarily the liability, which would be your trip and fall. So what I think we're getting to is a bit of a new normal. Like I think things are going to stabilize, but I'm also not here to say I think they're going to get a lot better. So I thought that was kind of just important context. Obviously, insurance companies are some of the largest and oldest companies in the world, and they're not nonprofits, right? They operate to make profits, and you can see their ability to change their pricing to make sure that continues to happen. And so that's kind of the background on the insurance world in general. And I wanted to have Dave speak kind of more specifically to how insurance as a budget item in an affordable pro forma affects you. So here you go.
Thanks. I don't necessarily want to overspeak the obvious, but and want to kind of keep this simple, but ultimately in affordable housing, we're more subject to volatility of expenses. So, you know, as you pro forma a market rate deal versus an affordable deal, obviously your debt service traditionally is much less than an affordable deal. You know, your sources are basically used to offset that total debt amount. So when you think about cash flow that's available from NOI, is significantly less than affordable housing, which isn't just about the rents, but it's primarily about debt service. So the amount of cash that's being used to service the debt in a market rate deal could be up to upwards of 50% of your cash flow, versus an affordable deal, it could be 10, 15, 20%, right? Significantly less. Debt service, generally speaking, without getting into all the nuances, is a constant, versus your expenses are not. So the net result of that is, in an affordable deal, we typically pro forma and can sustain 4% increase in, inflationary increases in expenses, where a market deal could absorb 6 to 8%, without even thinking about kind of the difference in volatility of rents, right? So when insurance goes up 15% a year, 20% a year, you have utilities that are going up in similar fashions nowadays. It's creating a disproportionate impact to affordable housing. So when everybody's out there yelling and screaming and say something needs to be done about insurance, and, affordable housing providers are really getting strained, they significantly are, and in a way that's much more impactful than even exists in the traditional market rate housing. So just fundamentally, from a kind of a pro forma and cash flow perspective, this has a disproportionate impact here. In addition, some of the traditional things that are moving, and I think we'll get into more of this a little bit later on in the presentation, but some of the traditional means to help control insurance, to help control claims, to bring more insurers to the table. One of those is renters insurance. The rental insurance agencies are very aggressive in trying to sell that coverage as a means to help mitigate ongoing insurance costs and increases in insurance. But in Oregon, we're somewhat limited, right? So we can't mandate coverage, or the tenants place coverage if they make less than 60% of median income. We also are, in terms of affordable rents and what we can require tenants to pay versus what we can't require tenants to pay, we have limitations. There are some solutions out there. We've been talking to kind of consortiums of much larger insurance placements, to where we can buy renters insurance amongst a 100,000 plus unit group, and we can get that cost down. Instead of instead of $15 per unit, we can get it down to maybe $5 or $6 per unit, right? So if we're buying that insurance directly from as an owner, we're buying that insurance as basically just kind of helping self-insure a little bit in an effort to bring more insurers to the table, saying, look, yes, we have an affordable building, but we're covering any potential tenant damages related to that with tenant tenant-based coverage. But those options are a little bit limited, especially if as we're sitting here in Oregon, and it's still an added cost, right? So we're trying to figure out ways if that is if that's part of the solution nationwide in Oregon. How do we do that? How do we pay for that in a way that's that mitigates the totality of that potential cost?
So quick survey in here. Raise your hand if you have at least a property with a insurance problem. Keep them raised if all of your properties have an insurance problem. Okay. Yeah. Yeah. So we've got, various, I just wanted to kind of get a feel for that. So, what I wanted to go through is a couple of, so if you come to me and say, I've got this property and I need insurance on it, there's a couple of like really problematic things that we have to kind of navigate our way through. And I would say the number one thing for me right now is electrical panels. There are these types called Zinsco, Federal Pacific. They're called Stab Lock. They were used in the 50s and 60s. So I know not a lot of affordable got built during that time. But if you're looking to like rehab an old building and you hear those words associated with the panels, just know you're going to have to take all those panels out. It's basically like I said, there, like 95% of insurers will not touch a building with those. They cause an inordinate amount of fires, and the carriers basically have just kind of blacklisted those. So keep an eye out for those if you're buying an older building. The other thing that we're coming across now is stuff built in the 70s and 80s is older plumbing. It is critical for us to, if we're trying to help you, that you've got some kind of documentation about what has been done to repair or upkeep that plumbing since it was built in the 70s or 80s. I know sometimes we end up with not great records, or we buy a building where they don't exist, but I would say, maybe in the process of CNAs or something, really trying to identify some kind of fix that was made to that plumbing, even if it's just, hey, half the toilets had new lines. Anything like that can help us. Because what's happening now is the water claims, and I'm sure you've all experienced one at some point. The second like a ServPro or somebody like that shows up, I mean, the dollars just start going, right? And the insurers are very sensitive to that. So plumbing issues have really become a hot button topic. And so if you're doing your due diligence on buying a new building, trying to figure out what's been done to the plumbing and having someone document it can be really helpful. Next, having buildings that are not sprinklered. This has become a big issue all of a sudden within the last like 18 months. So my couple of carriers that those two I told you about that I could take your affordable deal to, a bunch two of them came and those two came and said, if it's not sprinklered, we're not going to do it. And now there's a lot of stuff built before sprinklers became code, right? And that's not obviously a problem that's easy to fix. But just know that if you've got buildings without sprinklers, you've now kind of almost automatically gone into that second tier of higher priced carriers moving forward. And there's a particular issue with this also. So if you get into the construction side or asset management sides, there's two kinds of sprinklers. There is sprinklers that they call 13R or life safety. And those are designed so if a fire happens, it slows the fire down enough so everyone can get out of the building. They're not meant to save the building from burning down. So on one hand, the insurers like that because hopefully it means no one gets injured in the fire and we don't have to pay that claim. But it also means that that building could be damaged to the point where it's a total teardown. So I actually had one of these about 2 years ago now where someone was making s'mores with butane in their unit. And I don't know, maybe too much marshmallows, and they caught the carpet on fire, and it got up into the attic, and like that building, it was a $6 million claim on a garden style apartment building, even though it was sprinklered. I mean, it got up into the attic and it just burned the roof. And then all the firemen show up and they just dump thousands of gallons of water through the burned up roof. So, you know, if you're on the construction side, if you're looking at, you know, the sprinkler design, I would just say, obviously it's more expensive to have them in the attic, but long term in terms of savings on insurance and possible, you know, headache and a claim, just know that there's a big difference in how those can function and how the insurers look at them. And then on the other side, there's the someone hanging clothes from the sprinkler, someone swinging from the sprinkler, someone breaking it off. And those claims are expensive too, right? So it's kind of a catch-22, but I would say, you know, without those leakage claims, I would say it's going to become an even more important thing moving forward for the insurance carriers. Yeah, and so another thing Dave spoke about, you know, one of the things the insurance companies love is to have someone else pay for the claim. And in market rate, they have renter's insurance for people that leave a pot on the stove and it causes fire damage or it sets the sprinklers off. Those are very common claims that we see, right? But in most affordable deals, that goes on the owner, not the tenant. We're also seeing trip and fall claims. I've had patches where all of a sudden a tenant gets a payout because they slipped in the parking lot, and suddenly other people that know that tenant are saying, 10 grand, huh? Maybe I slipped on the ice too. And so those claims are starting to pop up and can be equally damaging to your ability to get insurance moving forward. Just I had one property that had 3 of them in one winter, and I think we were in $45,000 by the time those were done. And so that's something that's hurting as well. One of the things too that the underwriters are starting to ask for is if you've got, is it voucher programs. Would that be a correct way to say it? Like intellectually disabled, non-mobile, elderly, those sorts of things. They're starting to look at that unit mix and say, well, if we have all elderly people, maybe they can't get out of this building, or if it catches on fire, or maybe they're going to have more of a tendency to slip and fall. So I'm now for the first time being asked, like, if it's section 42 specifically, if there are set-asides for specific populations. And I know that all of your work is going to help those people that need it the most, but the insurance companies are using it kind of against you. So just kind of know as you're going through that, that's being scrutinized now. And I would always say, really talk through your estimate for permanent insurance and the planning stages, because the old numbers you used to use may not be accurate for a variety of reasons. Also wanted to say, if you have questions during this, please just raise your hand and ask them. I know it's not the most exciting topic, but we'll be more than happy to answer questions. Couple more just quick things. So fire scores is a new thing the insurance companies use. So if you've had like a fire come through the community you're in, there's a national kind of rating system now that will, it's if you think of like the flood mapping, if any of you are familiar with that, like it's flooded once here in 100 years. So now it's prone to flood. They're doing the same thing with fire scores. So Lapine, Bend, places like that, Medford. You could be building a brand new sprinklered building, and I still could have to go to that more expensive set of insurers just because they think a wildfire is more likely there. And we've got some thoughts on how to combat that. The other thing is crime scores. They're doing that too. So they give a 0 to 100 crime score based on reports they pull from the police. And yeah, go ahead. It's basically by address, kind of neighborhood, essentially. So it won't apply necessarily to your specific site, but if there's been a lot of like vandalism reported or arson reported or property crimes, violent crimes, if that's happening in the neighborhood, that's a data point that they can pull from public information and use in their underwriting. And it's not anything you can really do anything about. If your location's in that, it's in that, right? So East Side and North Portland, for instance, are getting hit with that. On the construction side too, we've got the concern around arson of a building going up. Those crime scores are really a big deal, really a big deal. So we want to transition kind of now into our thoughts on how to at least try and improve your situation you're in now, whether it be overall or for any one given process, any one given property. I truly believe, just like funding source, that there's got to be some kind of, there's got to probably be some type of subsidized insurance coming at some point. The amount of like claims we're seeing is pushing away the traditional insurance market. You know, I to some degree, there's just not the ability to stop every claim, right? And we've got buildings that are aging. And so I know that I'm sure a lot of you are familiar with the old AHARP and HARP, and they're, I guess now probably on their third iteration of what they're trying to do in the last 5 years. It used to be a big pool that they were just kind of using their own money. And then it went to a layered program where there was probably like 30 insurance companies in there. And I think now they're down to a couple carriers. Is anyone familiar with kind of what's been going on with them? Is that right? Yeah. Yeah, it's a really tough thing to solve because basically they had it going so well for a while to not have the private insurance market really involved. And then the claims got to a point where that couldn't sustain itself anymore. And now we've got the private insurers are back in there and dictating terms. So we'll see what happens there. At least they have some volume and are trying to kind of spread issues throughout that. The thing that always gets tough with that is if you finish a brand new property that could have the less expensive insurance from me, will you bite the bullet and pay for the more expensive AHARP to support those other properties, right? And that's a tough thing because each property essentially has its own budget, right? You want to speak to that a little, Dave, about maybe just how each property has its own budget and looking at that overall, how that might affect things?
Before we go there, just a little bit about, um, question for you, Andy, how much of the insurance volatility, especially when we go back to 2020, was based on natural disasters and those types of claims that took insurers out of the market that really had nothing to do with activity in the Northwest? Was that a significant impact?
Yeah, essentially there was a sea change in how insurance works. So if you look under the hood of an insurance company, let's say you own a $10 million building, okay, and you're going to get insured by, we'll just say Farmers Insurance. Well, we'll say Travelers Insurance because Farmers is there. Travelers Insurance is going to provide $10 million property insurance on your building. What they're actually providing is $1 million insurance, and they were buying $9 million of reinsurance from these 5 gigantic pools of capital that existed. And essentially, yeah, we had that giant freeze in Texas. Like, gosh, it was like 50,000 houses or something all had their pipes burst in Texas. We had the hurricane in Florida. We had half of California burn up in those fires. We had Oregon burn up in the fires. And these reinsurers are just some of the biggest pools of capital in the world. I mean, this is like billions and billions and billions of dollars, and they can put that money anywhere they want. And so what they all decided was, hey, we don't want to lose money insuring these insurance companies. So where Travelers used to be able to just be on the hook for that first million, now they're on the hook for the first 5 million. Okay, so a big claim makes a much greater hit to their financials. And so that's why you saw a ton of volatility in that price, was them all trying to figure out, okay, now that we're on the hook for so much more money, how are we going to offset that risk ourselves? And that's also the time you saw so many insurers just decide to be out of the business of insuring apartments in general. So if you think back to what we were saying about sprinklers, that's why they all bailed on non-sprinklered buildings, because before they're like, all right, we lose $1 million. Now they're like, this whole building could go without sprinklers, and that's a huge risk for us. So that change is what really made the sprinkler, non-sprinkler issues just fall into focus so quick. And frankly, I don't see the reinsurers changing how they're doing it. And so those rates we saw, we're just kind of seeing the washout of them trying to figure out what they're going to do in this new environment. So yeah, it wasn't like all of a sudden Oregon affordable housing complexes had much worse claims than they used to. There might have been a little of that, but that wasn't the reason that we're seeing what we're seeing.
Yeah, I think, we have heard that there was more claims, especially through the pandemic, in part because more people were spending more time or occupying their units more frequently. and there was more potentially liability claims just because folks were looking for ways to earn money during that point in time. Definitely affected the multifamily business a little bit. I don't have a lot of comments about HARP or AHARP. I know that there's through the course of time, the last several decades of trying to figure out the best way to insure buildings, right? And pro forma what that's going to cost. There's been a lot of different thoughts and processes about how to mitigate costs, how to make certain that coverages are bundled in a way that is most sustainable. But as the market has changed, those strategies have changed. And I think one of the complications we have now is you go back 20 years ago and almost every building was a separate entity and insured separately. And nowadays there's a lot more bundled or packaged coverages or insurance out there amongst, larger pools of insurance or consortiums. And so it's very difficult to untangle those, especially if you have a master policy or a package policy where you have, let's say, 10 different buildings under one policy. Your one claim on building A affects your loss history on all 10 of those buildings. So to untangle and say, well, I haven't had any claims on, my 50 unit building over here, so I'm going to just take it out of the pool and get cheaper insurance elsewhere. Sometimes that's very difficult because you're still getting risk rated based on what happened in that entire portfolio. So, I know that we've worked on a lot of strategies to try to figure out how to untangle those building by building at a time, how to apply some level of reinsurance and create basically loss histories on a building by building basis instead of a portfolio basis, because ultimately that's the only way out of that issue, right? I mean, there's no other way. Otherwise, every time that there's a claim, you're just going to keep kind of re-instigating that claims history, and it's very, very difficult to untangle and control the cost of insurance. You can't do it on a building by building basis.
I think, the one recommendation I made to that governor's task force was I think a great thing would be providing essentially renters insurance to all the affordable housing tenants out there. Yeah. Like, insure their stuff, their couches, their assets essentially. And if they were to damage the building accidentally, with the stove, hitting that sprinkler head, have that not be a claim the property needs to make, but out of that pool. I think that is the easiest path I see, besides just a straight slush fund to help people pay for their insurance. And I don't know if that'll become a reality. That's a big lift, obviously, but I think it might help with a lot of these structural issues. And I'm hoping maybe there'll be some great ideas that come out of that task force. Cause I think, like I said, something's got to change, because we can't just have insurance go up 25 to 40% every single year and have like you have to be able to have the money to operate these buildings. And if that cost keeps going like that, it's an unsustainable path. One of the things is, and this is completely obvious, obviously, but is turning in claims less. I mean, I think you got to really think hard about anything under 25,000 now. If it's a property insurance issue. Liability, someone gets hurt, that's a different issue. Okay. But property insurance stuff, I think more and more you got to bite that bullet. And I know that's a stupid thing to say, is like, hey, buy this product, but we're going to be mad if you use it. And we'll charge you a lot more if you do. I mean, it's unfortunately the reality. And I think, really having that conversation about turning in claims, I would not have it be just a snap judgment anymore. Like, oh, this pipe broke, call the insurance. I would not have that be the first thing in my mind anymore. We talked about, Dave, like, maintenance reserves. Talk to an insurance guy about what might exist for maintenance reserves that could fix a broken pipe. Is there much there?
Depends. But no, not typically. I mean, I think that, speaking about reserves, it almost needs to be a separate insurance reserve established for the handling of claims. So I think a lot of these solutions, I mean, what we're talking about is some level of self-insurance, right? Even on the tenant insurance, I mean, void a program that helps pay those costs. One of the things I introduced earlier, there are some national efforts and programs to basically mitigate the cost of renters insurance, knowing that in some cases, the state of Oregon in particular, and affordable housing, we'd be paying for it directly, right? But the way that those programs typically work is there's a level of tenant coverage. It usually covers somewhere upwards of $100,000 of property claims. Hopefully anything that, relates to what somebody could do with in their unit that could cause damage. And that, that insurance could be applied. If it's a 100-unit building, you could buy 100 units. It's, essentially $500 a month, right? For that coverage. And then the tenant, as an option, can basically insure their contents for not much, $3 to $4 a month or something like that. So you're giving the tenant an option to provide full tenant coverage inclusive of their contents, but you're covering those property damage claims directly, basically through, your own pocketbook as a total cost of what insurance you're buying for the building.
Yeah, there's various programs out there. So there's one you buy just as a landlord and it's your policy, right? And then there's other ones where it provides it to the tenant and they've got a policy, right? And if they've negligently damaged your unit, that policy then provides coverage, right? So there's various ways to slice that. And what you're essentially doing is putting a layer of insurance between the property's insurance. And so it's an extra layer. So there's multiple kind of ways to skin that cat, as they say. And depending on what your objectives are and prices, then you can kind of look at the different ways of doing that. Because you're right, sometimes you don't want the tenants involved, and then sometimes you do want to have the tenants involved. So there's multiple ways to do it.
Yeah, typically if you're buying the property insurance coverage, for the unit, right, it's going to follow the unit. So tenants are going to come and go in that unit, but the insurance would stay in place essentially. Typically you're providing the insurance company information related to that unit turnover, but still it's your insurance. So if you're instigating a property claim, you would be doing it with the insurance company directly. If they're buying their own contents coverage, right, they would have to initiate that claim on their behalf. And one more thing about reserves. I mean, as I know many in this room know, we're typically setting up reserves or replacement reserves or operating reserves based on projected needs of wear and tear in the building, right? Not insurance claims or losses. So that's a difficult, with outside of a separate pool of funds or a separate reserve being established in affordable housing, it's very difficult to think about how I'm going to fix a fire damage or flood damage based on replacement reserves. It's going to deplete reserves pretty quickly. And outside of, any 30-year schedule we use to project the use for those funds. So.
Yeah, and my last comment is those general liability claims. It's funny, if you study the history of insurance, it was the guys at Lloyd's of London, which was a bar or coffee shop, depending on what time of day it was. And it started with, okay, if you're shipping this load of stuff and something happens to it, we'll pay you back, right? And then all of a sudden someone was like, okay, well, you're going to pay me back if something happens. What if I just throw it all overboard because I couldn't deliver it? And then they said, well, I mean, we're not paying you for that. And so they had to start adding things they wouldn't cover you for. And like lawyers got involved basically instantly to be in the middle of those disputes. And so it literally used to be like, this is how much you'll pay to protect your ship's cargo, to now each policy is like 250 pages, right? So general liability, and if someone falls and gets hurt, don't try and take that on yourself, with at least not without a lawyer and talking to your insurance person, because there's things you got to follow. Yeah.
Yeah, I think we're on the cusp of creativity around this issue, right? So as deductibles go up, or there's an election to move deductibles up to curb the cost of increase of insurance, there's an analysis or thought process behind, okay, what are all the things that could potentially cost me cash out of pocket, right, towards that deductible? Sure, I could put renter's insurance in place and I could cover tenant initiated damage, right? That's one issue, right? I also have exclusions on most policies. I have pollution exclusions or mold and mildew exclusions and those types of things, and those could potentially catch me. I could have a freeze in a building or something that's not tenant initiated but cause a huge claim, right? So it's people are basically trying to figure out how to self-insure or at some level based on those potential risks. And it's difficult. Even if your deductible's $5,000, there's still, there's enough exclusions in insurance policies nowadays, you could still be caught with a potential issue, right? That you're having to dig into reserves or otherwise. And so, yes, looking at ways you can reinsure, right, to help mitigate that upwards of $100,000 claim, or ways that you can set aside reserves or know that you have operating reserves or other reserves available to basically pay those damages if they occur. But we know that insurance isn't going to cover 100% of every potential issue or potential damage to a building. So that's not a conclusive answer, but yeah.
Yeah. So moving forward, just a couple things in the vein of trying to not, make claims. Definitely don't treat your property insurance like a deferred maintenance plan, right? I think plumbing, I see a lot. Certain buildings will get grease buildups, and overflow sewer. I've had some buildings that had like really bad problems with that. It's super expensive. And that cleaning that out rather than having two $50,000 insurance claims, long term, you'd have come out much further ahead, right? Same with sidewalks and parking lots, doing the repairs so people aren't tripping and falling. We see them kind of all the time, and they're just getting more expensive because now people, just in general in our country, it used to be you got into a car accident or you tripped and fell somewhere and you're like, man, that was dumb. Now you're like, I'm getting a lawyer. I bet I can get 25 grand out of this. And that's part of what's driving the cost of insurance is, like, I think it was a couple years ago now, if you get hit in a car accident, you're more likely to hire a lawyer than not. now. So we crossed that 50% threshold. And so it's like that person getting that extra $5,000 goes into the cost of everyone's insurance to pay for it, basically, right? Another thing is stairs. I mean, we've seen some pretty, if you've got cement pads on stairs, be careful of those. Make sure those are getting looked at. When those give away, that's really a bad situation. Particularly in an ice storm, we've had properties that, they run out of de-icer, or you just can't apply it fast enough and you've got cement staircases. That's a super dangerous situation, and trying to do whatever you can in that situation. I think having an oversupply of de-icer for that, especially if you're in Portland, for that once every couple year thing that happens and it's a big disaster. If you're in a place that snows all the time, that I think, documenting what you're doing about the snow and ice can make, paying for someone's broken arm a medical bill issue, rather than I've got a lawyer and now I've got $5,000 for my broken arm and 15 because you didn't document what you did to prevent me from slipping and falling. That I think is a big deal. This last ice storm, obviously we had a lot of buildings lose power, and that caused burst pipes everywhere. I mean, I think I had more claims in that week here in Portland than I've had in like any other month of my career. I mean, it was just like everyone was calling me with bursted pipes. Nothing you can do about that, obviously, but I've had equal amount of, when that freeze comes, a vacant unit where the heat is turned off. And like, those are just so needless. I like, it's so expensive if that pipe bursts. I mean, it's like you're probably at like 30-50 grand minimum, especially if it's on the second or third floor. It's like procedurally making sure, like, as that freeze is coming, like if we've got vacant units, I need someone to go check those things and make sure there's heat. If a tenant is leaving for Christmas for a month or something, if there's any way to make sure that that person leaves their heat on. I don't know, is there thermostats that can't be turned off? Is that a thing yet? What do you do as a property manager when that freeze is coming?
Not a lot, but I think that, having emergency plans and having emergency mitigation plans are important. So, and documentation is important. So, not every single person that works at the property is going to know everything about, fire sprinkler risers, right? But every single person that's working there should know how to shut them off. Super important. Everybody at the property should know how to document conditions. So one of the things we've done, universally, is update all of our checklists to basically monitor and document change conditions at the property. Andy mentioned, concrete stair treads. We've had claims, or we've seen claims at properties. It used to be that if your foot went through or a stair tread broke, there's a potential liability, right? Now we've seen claims where somebody said, well, I tripped on the stair tread because there was a crack in it, right? Well, what constitutes a crack in a stair tread, right? I mean, it's challenging. We've seen a claim where during the ice storm, where somebody said, well, management and ownership didn't clear the ice away, and so we had no ability to leave our apartment for 3 days, right? Well, fortunately, we had documentation of exactly what those sidewalks and parking lots looked like throughout the ice storm and every time that the ice was cleared. So there was substantial documentation to show, no, it was actually very clear. People are coming and going, people are walking, people are parking, right? No problem navigating that site. Super important. Again, not every person necessarily needs to be an expert in building mechanical systems, but if our checklists indicate all the mechanical systems in the building and are documenting conditions, we know if those conditions are changing, right? So if if those things are documented and they're escalated to say, hey, this looks different than it did last week on my monthly checklist, then we know from a preventative maintenance standpoint, we know that something to be checked and it's a potential issue, whether it's something that would, cause an issue during an ice storm or otherwise, or different kind of event. Yeah, sorry. Question. Yes, go ahead.
Renter's insurance will cover your items in your car. Yes, that's the policy that covers it.
So it's emergency plans. It's knowing that everybody's connected to that emergency plan, knows what to do in case of a fire, water damage, ice or weather event or otherwise, and checklists. So there's a couple things, we've been working on to make those checklists a little bit easier for staff to use, a little bit more organic, to capture the documentation quicker by making certain that that whole process is electronic and can be escalated to a supervisor. We also instituted a system about a year ago. It's called Interplay. It allows all of our maintenance techs to be able to take every certification course for every mechanical system in a building, right? So we can think about the systems that are critical to a building's function and made certain that personnel that's working at the property can basically get those certifications and have that expertise as it relates to, is that system properly operating or not, which is super helpful. So, so there's tools and there's technology in place now that helps prepare, in addition to making certain that there's a written plan and everybody understands what to do in case, sprinklers go off in a building at 90 miles an hour. So.
Moving on to a couple other things. Mold, we all deal with it in the Northwest. Piece of advice, if you've got a mold issue that you need to talk to insurance about, you do not have a mold issue, you have an excess moisture issue. Strike the word mold from anything you mention. We don't have mold, we have too much moisture in this unit and we have to deal with it. Because it's always excluded on normal insurance unless you have pollution insurance, which very few people do. But mold is a symptom of excess moisture. So just know that. And if you're dealing with insurance, it's not mold, it's excess moisture. Other thing too, when marijuana became legal in Oregon, they created a standard set of exclusions around marijuana. So generally that's not an issue unless you're doing something with butane. Like my $6 million claim. They did. Luckily, the s'mores story held up and we didn't have to fight that $6 million claim. But that could have been a very real thing if there was, if they were not making s'mores, but were making hash oil or whatever you make with it. Like that whole claim could have possibly been declined because it had to do with marijuana. So just know if you've got like a building where you feel like there's maybe a chance of something like that, go look at it, see if you've got that marijuana exclusion, and then start thinking about what you might have to do about it, because it could be a very big declined claim. Old buildings, we've kind of talked through this, but any improvements you make, capital improvements, like write it down and send it to your insurance person at renewal time. Like we fixed these sidewalks, we did GFIs in this unit, we replaced this many HVAC unit. Like all of that stuff helps for us to tell an underwriter why we should get better pricing. Again, we talked about, when you're looking at deploying reserves, just think in the current bad insurance environment, like, do we need new hallway carpet or should we have the sewer lines plumbed out? Like, I know you need both, but just know that, think through that in terms of what's going to prevent insurance claims, because that can change things financially really quickly if you have some big claims. Also, just a quick, this is an insurance nerd thing, but ordinance and law coverage. So if you have an unsprinklered building that gets damaged to 50%, you now have to put sprinklers in the entire building. And that is extremely expensive, obviously. And you have to do all the ADA stuff. So that's a coverage. If you're the person in charge at your organization that buys insurance and you've got something old or unsprinklered, keep an eye on that coverage. If you're in a high fire zone, there's these groups called Firewise, and it's a group of people in your neighborhood that are all trying to prevent wildfires. They give you for free, they'll come walk your property. They will give you advice on how to fortify it against wildfire, which is great for me to give an underwriter, and also good in the case that maybe by some miracle it stops that wildfire from getting to the buildings. So I highly recommend those groups. They're full of good information for both your pricing and trying to prevent a claim. High crime issues. Did anyone see in the paper this morning what the claim at the Delta Park Lowe's, what that just settled for? So that was the one where the security guard shot the guy in the Lowe's parking lot. Did you guys hear about that one? So the guy had been coming to get pallets and selling them, and they didn't want to anymore. They didn't want that guy doing that anymore. So the owner, you know, this is just in like, don't do this, was emailing the security company saying, I want you to be highly aggressive, stopping this, stuff like that, putting that in writing. The security company was not as professional as they thought. Like, this guy did not have, I don't think he had a license to carry a firearm. He ends up shooting and killing that person in the parking lot over like a dispute where he thought he was going to maybe get run over by the car. And that went for $20 million yesterday in court. So, like, so many wrong things were done there, right? But like, if you're hiring security, just know that you're getting what you pay for, essentially. Do a lot of due diligence on their insurance. Make sure they've got more than $1 million, hopefully. And make sure that their people are certified. So, that's definitely something that can backfire on you, because that security company, let's say they had $1 million, that owner is now on the next 19, I think. So just a good example of something gone really bad that was supposed to stop a problem, right? Cameras, if positioned correctly, sometimes can help, right? Like the slip and falls, okay, that person didn't, or so think about those in spots where you're having some issues. And then just know if you switch insurance to a new carrier, within 90 days, they're going to come walk that property likely and be looking for problems. So just have that in the back of your mind. And if they see those problems, they're saying, either fix this or you're not insured with us anymore. And you've got 30 days to do it. So just keep that in the back of your mind. Just some quick things on insurance. We talked about this a little. One big policy or individual policies, it can work both ways. But like Dave said, I've tended to not like that, because a big claim at one property can affect all the others. And you lose that good insurer for the other 10 properties just because of one bad claim at the 11th. So keep that in mind. When you're quoting, just know, guys like me, there's not a lot of places to go. So talk to people about how they're going to do it and why it's worth your time. Don't just like get quotes to get quotes. You probably won't get anywhere and you'll waste a lot of your time. Pollution coverage, like we talked about the mold, we saw that big Legionnaires claim was a Portland deal a couple years ago. Those are pollution-based policies, so you can get those at each location, but they'll run you $3,000 to $4,000 per location probably. So just keep that in mind. Couple things on construction insurance. Is anyone in here in the like development construction part of the business? Okay. Yeah. You've seen the price of that insurance go crazy too, right? So a lot of times there's a lender requirement, there's a tax credit partner insurance requirement. I've seen people go and get a liability policy for the ownership entity that excludes supervision of construction. I'm just here to yes, that thing only costs you $5,000, but I'm telling you that's a horrible idea and I wouldn't do it. You get what you pay for, right? And those policies are basically nothing. So if you're building a $15 million project, your insurance should at least be 20 grand for you on general liability. If it's not, you're probably getting garbage that won't do anything besides check the box with the lender. One of the big things I look at in every construction bid is the general contractor is going to charge you for their insurance. Hopefully none of them are in this room. They'll be mad at me, but oftentimes there's some profit put into that number. We've got a policy structure that buys insurance for you and the general contractor. So we price it out for you and say, this is what you could insure this project for to meet these lender requirements. You don't have to use that, but it can give you at least a baseline. And try to avoid a wrap policy as much as possible. We call them OSIP, CSIP, or wraps. What they do is basically you pay double or triple for insurance and it invalidates all the subcontractors' insurance. So essentially now you've only got $6 million for anything on that project. Whereas if you bought insurance, the general bought insurance, and all those subs bought insurance, you might have 40 or 50 million. So you're paying double or triple and getting way less. So if you're using wraps, I would start not doing that, or at least thinking really hard about it. Another quick thing, when you are signing contracts with architects, engineers, consultants, those guys had really good lobbyists. At some point, they made it law that they could limit their liability to their fee. So you could have, I've had this happen where a geotech charged $15,000 and caused a $4 million problem, and he gave back the $15,000 and walked because that was in the contract. But the person has $1 million of insurance. So I always tell people, take out that fee language and say up to your limit of insurance, because why are you buying $1 million if you're just going to limit it to your fee every time? So that's a very important thing, because that's a very difficult hole in the insurance stack to fill if it goes bad. Same with the general contractor. I mean, you want someone, you don't necessarily, I mean, there's probably going to be a lawyer involved, but just know that not every lawyer who does land use or contracts knows everything about insurance, and find a good insurance person that can go through that language and find problems and give them the drafts and let them give you some feedback. Here's one. I don't recommend you let the GC buy the builder's risk. I've had multiple arsoned buildings lately, and it affects the owner much more than the general contractor, because you're looking at possible loss of tax credits, you're looking at possible loss of cash flows, extra construction interest, all these other things besides what it costs to rebuild that building. And you want to be in charge and at the table for those conversations, not just third hand hearing what the GC's insurance agent is telling you about that. And just know on those policies, there's 3 buckets of coverage. There's what it's going to cost to put the building back up. There's extra soft costs, which is construction interest, the tax credits, all of those things. And then there's loss of rents or cash flow. And you're going to want stuff in each of those buckets. And those soft costs, like I think that building was 4 million hard costs, and our soft cost claim was almost $1 million. with the tax credits and all this interest. So just scrutinize that. Those policies, builder's risk, you pay by the day. So don't start it during your dirt work. Start it when you go vertical, if the lenders will let you do it, or when you get materials delivered on site. If you can cut 2 months off that 14-month policy, you've just saved, 15%. Yeah. Yeah. I think you're being bluffed. If what we can do is take the pro forma and show the real costs and then associate, associate a percentage of it. I've not had pushback on that actually. So yeah. Yeah, I guess I don't know how to answer that. What I would say is that these policies are so full of loopholes and possible problems. It the worst part for us is when you're expecting one thing and something happens and that's not covered, right? You're like, God, I just spent $150,000 on builder's risk and you're telling me I don't have coverage for this? So whether you don't have a person that has that expertise now and you could hire someone as a consultant or have them do the insurance. So there's a lot of nonprofits. I don't insure any of their properties, but when they build something new, they come to me because there's so much nuance here. So that's a strategy maybe you could look at. But yeah, everything is tied in. That contract with the GC is tied into your builder's risk, and then the GC's contracts with the subs is tied in. So you definitely want someone who understands it all and has been through it to learn the lessons the hard way, I guess, because you don't want to learn the lesson the hard way. Go ahead. Oh yeah, yeah. It's a totally double-edged sword. So like the sprinklers go off, you're at probably 30 to 50 grand right away, right? But maybe you're not at 6 million, and that's the way the insurers see it. And you're right about the exterior. Like that big fire happened in Hawaii, and they had brand new affordable housing project that was sprinklered, went completely to the ground. It didn't stop it. Yeah. So yeah, yeah. Either that or that was a conspiracy to help Oprah. I'm with you. I think it was the right construction materials, but yeah. Yeah, and that, like I said, that Firewise is a great resource because they'll come and walk your property and tell you exactly that. And you're a heck of a lot better off being proactive and preventing your building from burning down than you are have it burn down, deal with the insurance company, get new permits, find a new general contractor, build it all back up. You can imagine, right? Sure. Sure. Yeah. I mean, it's one of the few proactive things you can do to fight back. But yes, there's absolutely redlining going on where they're just like, we're not working in this community. Like the people in Detroit, I don't know how they get insurance there. Detroit, Oregon. I mean, I guess there's nothing left to burn. Maybe they're in a better spot there, but yeah, it's tough. It's tough for sure. One other, just a couple other quick things. Builder's risk, there's the premium for that, and then there's the extras that they'll make you do for cameras, fences, security. Make sure you're paying attention to that so that doesn't catch you flat-footed at the end. Especially if you're in a crime zone, if you have any structure over 20 million bucks, that you can, some of these camera systems, it's like 10 grand a month, and you got to carry it the whole project. So yeah. The insurers will tell you that they are pricing in the fact there's no risk for the first 2 months. I don't believe them because when I price it one way or the other, it's not true. But sometimes you just can't get over that hump with a lender, and you gotta just bite the bullet and start it, even though you're just pushing dirt and there's nothing for fire, water, or wind to do out there. So, but we've had some success even on affordable deals, getting the start date till at least foundation. And then last thing, if you're doing development and you haven't done it in a while, do not use numbers from a deal from before. Find an agent and say, hey, this is the address, this is the details, because it's probably, all of these things now have such a radical effect on what that price will be, especially for builder's risk, that you don't use old numbers and carry that in a budget for a year and a half. You don't want to do that. All right. And that's the end of the information. You have anything else you want to add at the end here?
Yeah, just for a conversation point and a question for you, Andy, is so, for the first time, at least in my recollection, I think there's a conversation, even a national conversation, about how what how building design can impact insurance, right? So, um, you know, at what point is a building too big? At what point is a building too tall? At what point, does kind of landscape and other design elements impact the ability to actually obtain insurance and mitigate costs, related to insurance? Um, I guess that's the first question. I know in as it relates to kind of what's currently happening out in the market, there's thoughts about how to diminish liability claims, how to put uh, better security or cameras in place on site, how to have AI monitored cameras and smarter technology involved in helping reduce those liability claims. But just from a property insurance, property claim, is there advice or the things you're hearing from the market in terms of what can be done as it relates to building development and design that could help mitigate costs?
Yeah, I mean, what's happening with these insurers is they're using data like lots of different businesses are, and they're getting really good at, like, they're using satellite pictures of your roof to say, like, hey, this roof looks old, I'm not insuring this anymore. Like, hey, these trees are touching both buildings, I'm not insuring this anymore. They are finding things they don't like about properties using the internet, GPS, Google Earth, all those sorts of things. And so, and then, I talked about those reinsurers, right? So certain of these carriers are like, I can't have any building over 5 million bucks unless it's 100 feet from the next building, right? So I know you can never develop your project just to fit through all those boxes of insurance, but the more you can think through what gives me the greatest odds of having a smaller property insurance claim, that's what the insurers are trying to get to. So smaller sprinklered buildings, right? Not in a wildfire zone, not in a crime zone. So they're getting lots more kind of data points of things they don't like. And, as you're thinking through a project, call an insurance person and just run it by them and say, here's what I'm thinking. Is this going to be a problem? Like we were just talking about one, and it's like, it's 12 stories and it's 60 million bucks. It's like, insurers are going to hate it. I'm just here to tell you, like, don't pencil in cheap rates on it. So it's just a tough thing to navigate, and you got to do what you can. There's no easy answers, unfortunately. Yeah. Oh, yeah. No, yeah. Yeah. I'll tell you, they're private businesses, and they're openly asking me in writing if what the situation is, right? So I don't know if they've got a loophole or what they have, but they can say, is there disabled people here? And if so, then they say, we're not going to do business. And that is a bizarre, interesting, and that's a good point you make, because they're, like I said, they're openly doing it. Um, there's no, hey, I'm going to call you on the phone and we're not going to put this in writing. I mean, they'll ask you. And so I don't know what the answer is to that. But yeah, it's a gross part of it. There's no doubt. And it's profit over everything for the insurance companies. And that's always going to be their focus, I think. Yeah, I mean, there's what I would say is, at the beginning when a project is going, I don't think it's necessarily a problem, especially if you have a third party providing the services. Um, but if you start having, where I've seen it become a problem is if somehow there starts to be a lot of claims. So I don't think that's necessarily, if it's permanent supportive housing, there's going to be a lot of claims. I think it's just any apartment. If you start running into a rash of claims, then those questions are going to start coming, and they're like, okay, I'm starting to like connect these claims with this tenant population at this building, and I'm not liking it anymore. Because what we're always trying to do is tell the story about why those claims aren't going to keep happening. That's one of the, like, if there's claims happening, I'm the guy saying, well, yeah, that happened, but it won't keep happening because of X. And so that's my take on it, Dave.
No, I agree. I mean, I think that we're often telling the story up front, right? So yes, there's permanent supportive housing in the building, or it's exclusively permanent supportive housing, but this is how this is functioning. Here's similar buildings we're operating. Here's the services agreement or the MOUs that are in place to ensure that, the building can be operated. I think that, um, you know, I think it's especially if there's pushback on it. We haven't got a lot of pushback, especially in new buildings, but if there is pushback, I mean, that's something that, um, we could think about the renter's insurance piece too. I mean, so to mitigate, as there's more and more of an objection to affordable housing or specialized populations in affordable housing, the more we can say, yeah, but we're covering tenant related property claims, with this supplemental insurance. I think it, hopefully brings more insurers to the table or keeps them at the table potentially. it's a tool we can use, or we can always pull out, you know, if I tell Andy, you know, like, I'd like to tell you it wasn't a permanent supportive housing unit, but it was, you know, it's a tool we can put in place and saying, oh, well, we're gonna buy tenant insurance for all our permanent supportive housing units. So.
No, I think there's certainly a case to be argued it's better. At least no worse than stick frame. What insurance hasn't quite figured out is if you've got mass timber and like the first 2 layers get damaged, but the inner 5 haven't been, do they have to replace all 7 or just the outer 2? And no one's really figured that out yet. So they're treating it like they got to replace all 7. And I know that's kind of against the principles of that mass timber. So at some point there'll be a legal case that maybe decides that. And if it goes the right way, then we should see pricing actually get better on mass timber, because if you can just peel those 2 layers and put 2 new ones on rather than take the whole beam or a whole section out, then you're saving money, and that's what saves premiums. But yeah, it shouldn't be any worse. Okay, did we finally run out? Oh, okay. You're fine. Yeah. Now I've tried to really it's used more and more, and so yeah, we've really been trying to advocate for it getting cheaper rates because you're using mass timber. I mean, that's really the argument we're trying to make, no doubt. Anything else? Are we ready to call it a day on insurance? All right. Well, thank you all so much. There's our contact information. And yeah, thanks for coming.